Hassett. Kevin, of course, the former chairman of the Council of Economic Advisors under President Trump. Kevin, good to have you back. This could be an interesting development Jerry was getting into when the well-to-do are now saying, maybe not. Maybe this isn't quite my cup of tea, getting a vacation home or investment property because things are not nearly as hospitable. What do you make of that?
Right, that's a normal pattern that we've seen over and over, and it's my view that right about now we're entering a recession, and when that happens, and basically with this high inflation, the Fed tightens, then people get extremely wary of buying homes, and you see home prices collapse sometimes. And so there have been repeated episodes of this in Florida, in California, in the places especially where people get second homes. And so I think we're probably about to run through one of those cycles. If you're thinking of buying a house, I honestly encourage you to wait until the end of the year or something, because there's probably a lot of bad news in the real estate sector coming as people start to recognize that we're in a stagflationary recession.
So you think it's happening right now. So if you're right that we're entering a recession or could be around now, and you need 2 quarters like that, then that recession is a this year event, not a next year event.
Yeah, I think, and a way to think about it is that with prices, if you actually take the current month, wholesale prices or the current month top line consumer price index, they're running north of 10. And, Neil Cavuto has been covering this stuff forever. And if I say, hey, Neil, factory production went up 8% last month, is that good? Year over year, then you would say, oh, it's a boom, right? But if prices go up 10 or 11%, then it's actually a decline in real output. It's like if I spend $10 on apples and apples are $1 a piece, then I get 10 apples. If apples are $10 a piece, I get 1 apple, and the total production goes down from 10 apples to 1 apples, and it's all because of this weird price effect. And this weird price effect is driving the market right now. And my expectation is it's just going to be impossible for nominal sales to go up so much that real sales are positive.
And the same is applying to wages. The same is applying to wages, right? I mean, they might be running at a 5 or 6% clip, but when you have inflation running several percentage points north of that, it's all wiped out.
Right, because remember, GDP report is real production, real income. They have the income side and the product side. But yeah, I mean, with this much of an inflationary headwind, it'll be stunning if, I think the first quarter right now, people are looking for a number in the ones. And I think for the second quarter, it's likely going to be below that. And so, sadly, we're in a recession, say, right when the Fed has to tighten. But the inflationary forces are so high that the Fed is going to have to continue to tighten, even if they see the data really head south.
Do you think that we've come to an inflection moment, haven't we, Kevin? I mean, where I'm sure the Federal Reserve wants a soft landing, and that's always the goal. It rarely happens, but it's acknowledged, and maybe it's already reflecting that acknowledgement when so many members talk about a half-point hike next month, another half-point hike after that, maybe more rate hikes to come, so that we're at prohibitively much higher rates than we thought we'd be a little more than a few weeks ago, and that leads us to a recession. Do you think the Fed acknowledges that and is behaving as if it does, because the better and more important battle is to get this inflation under control?
Right. The long-term inflation under control is the most important battle that the Fed could fight. But the history of it is that inflation doesn't really start going down until the interest rate's higher than the inflation rate. And you can make the charts. You're great with charts.
Yeah.
We got a long way to go. And so going to 3% this year or something like that, which is what markets about expect, is really, at best, say halfway there, depending on inflation slowing a little bit while they do that. And I don't think that's going to happen. The fiscal policy is expansionary right now. Monetary policy is expansionary because the actual interest rate is below what, the market clearing rate would be absent Fed policy. And so we've got the foot on the gas still. And so it's hard to see why inflation should go down much.
You mentioned at the outset, we were talking about real estate and how it might affect, maybe overheated markets. Florida certainly would be among them. We're seeing little evidence of that yet. Now, it might still happen, but even when you look at the underlying economy and some of the earnings that have come out thus far, we're still early in this review of first quarter earnings. Most of the companies are coming out a little better than expected. Their guidance a little better than expected. Some people were bracing for the worst. Maybe in the case of Wells Fargo, we got that, but few others. What do you make of that? Or is it just delayed, but it's coming?
Yeah, I think that we're about to see it. And, another chart you could put up for folks, Neil, at some point, is that they have, in the Michigan survey, they asked people, is it a good time to buy a home? And that question is got a score, or an answer score, that's the lowest it's been in 40 years. And so Americans are really depressed about the real estate market because they see really high prices and rising interest rates, rising mortgage rates, and they're heading for the sidelines. And so, it's sadly for people who, are trying to move and sell their home, it's about to be a very illiquid market, in my estimation. And it's a good time to wait for stuff to settle down if you're a buyer.
All right, we'll watch closely. Kevin Hassett, the former chairman of the Council of Economic Advisors. Don't